Taiwan Semiconductor Manufacturing Company reported quarterly financial results on October 17th, 2024 that has huge implications for the broader semiconductor industry and the developments in the artificial intelligence market. So I'm going to review the company's latest financial results. I'm going to talk about the implications for the broader market for artificial intelligence and semiconductors. And I'm also going to update my buy, hold, or sell recommendation of Taiwan Semiconductor stock. Remember, I've had this stock rated as a buy all year long in 2024. It's been one of my better performing stocks in 2024. Not all of them have worked this well, but Taiwan Semiconductor has been one that has worked well. So I'm pleased to see that if you invested in Taiwan Semiconductor, you would have made a good deal of return on investment in 2024. But let's take a look at these latest developments and update the recommendation here.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, Taiwan Semiconductor reporting year-over-year third quarter revenue, which increased by 39%, while net income and earnings per share increased by 54%. The company has some of the best profit margins of any company in the world, a gross profit margin of 57.8% in the latest quarter, and an operating profit margin of 47.5% with a net profit margin of 42.8%. Now, these are really strong profit margins, but it makes it even better when you consider that this is a hardware manufacturing company. These are the type of profit margins you expect to see from a software type business. For a manufacturing business, it's much more difficult to generate these levels of profit margins. And I wouldn't be surprised if Taiwan Semiconductor ranks the highest in terms of profitability for manufacturing companies worldwide. Now, I don't follow every single manufacturing company, but this profit margin is among the best of any manufacturing company that I follow, and it's a really strong profit margin overall. That's why all year long in 2024, I've been talking about Taiwan Semiconductor stock, how great of a business it is, and the valuation made it such an attractive investment. Of course, I've also talked about how the reason Taiwan Semiconductor stock is available at an attractive valuation is because of the geopolitical risks. That's why Taiwan Semiconductor stock trades at a valuation that's significantly lower than a business with this kind of performance deserves. A business with this kind of performance, if it was a US-based business, would be trading at maybe double the valuation that Taiwan Semiconductor stock trades for. Management says that their business in the third quarter was supported by strong smartphone and AI-related demand for their industry-leading 3 nanometer and 5 nanometer technologies. In the semiconductor industry, the smaller the number of nanometer, the more innovative the technology. So it's smaller transistors. 3 nanometer is the newer technology. 5 nanometer is the previous newest technology. So they go smaller and smaller, and that means better and more innovative technology. Taiwan Semiconductor's technology, I'll go into a little more detail later about the breakdown of its technology and the breakdown of sales and the technology associated with each sales segment. Now, an interesting thing to note here is that management saying that AI-related demand remains strong. That's good news. And now we've got 2 data points already in the last week or so that reiterates how strong AI-related demand is. Remember, a couple of days ago, I released videos about ASML, which is a supplier to Taiwan Semiconductor, who is a supplier to NVIDIA and Apple and Qualcomm and others. And ASML also said a similar thing, right? They said anything related to artificial intelligence remains strong. But what ASML said is everything outside of artificial intelligence was not so strong. TSMC is saying AI-related demand remains strong, but also smartphone sales are strong. So that's an added thing here we didn't see with ASML. So that's good news for semiconductor industry participants that Taiwan Semiconductor is also noting a bump in smartphone related demand. And we're already growing to be accustomed with AI related demand being great. And as NVIDIA CEO Jensen Huang has stated, it's insane how strong demand is from their perspective. So management expects the good times to continue here. Revenue expected to be between 26 billion and 27 billion for the upcoming quarter. And so that would be an increase from the 23.5 billion it reported in the current quarter. So they're expecting a bump of revenue somewhere along the lines of 3 billion quarter over quarter, which is a roughly 12 to 15% increase quarter over quarter. Year over year, that growth is going to be much larger. And so Taiwan Semiconductor expects the good times to continue here, with gross profit margin at 58%, operating profit margin of 47.5%. So sales growing, operating and gross profit margins remaining elevated. Taiwan Semiconductor is not lowering prices to generate these increases in sales. The increases in sales are coming as a result of organic demand for its manufacturing processes. So it's generating organic demand. It's not any kind of promotion, incentive, price discount, etc. It's just the innovation that's leading to this growing demand in the semiconductor industry. So here's a little bit of a breakdown between the business segments and the revenue generated as a percentage from each business segment. And unsurprisingly, high performance computing, which is AI related, increased to 51% of its total revenue in the third quarter 2024. That's up from 42% of its revenue in the third quarter of 2023. So the high performance computing segment is growing to take a larger share of the company's overall revenue, and that's likely to be more concentrated going forward as we're getting all of these data points suggesting that the AI boom is just getting started. It has a long runway to go, and we're getting more data points in this quarter so far from ASML and TSMC that the AI related demand remains strong. Nvidia suggesting that demand for its latest generation technology, demand is insane according to the CEO. The CEO, Jensen Huang of Nvidia, saying that its next generation technology is sold out for all of 2025. And customers have to wait for more than a year for its products. So AI does not seem to be slowing down. And that's great news for the market overall, because AI related investments have been fueling the stock market growth here in 2024, along with the receding fears of a recession, as economic performance, especially in the United States, has been robust. And from a geographic perspective, revenues from customers based in North America accounted for 71% of TSM's revenue in the third quarter of 2024. That's up from 69% in the same quarter last year. China is becoming a smaller and smaller part of TSMC's business. However, China is still a big risk because of the continued threats they make to Taiwan and integrating Taiwan into China, which is the reason why TSM has traded at a relatively cheap valuation. The risks from the threats from China is what brings down the company's valuation. The company's manufacturing facilities are based in Taiwan, and if China were to attack that region, it's uncertain how much of a disaster it could be for TSM. Now, I highlighted that I've had TSM stock rated as a buy all year long. I last updated that recommendation on September 10th, reiterating that I thought the stock is a buy. The stock price is up to $209 per share now, up from around $90 per share to start the year. It's now trading at a forward price to earnings of 25, which is up from where it started the year, trading at a price to earnings of around 15. But the company's performance has improved throughout the year. Its profit margins, its revenue, its cash flow, net income, all of which have increased. And the prospects looking forward have also improved given this new category of artificial intelligence that's now joined the company's revenue and profit category and taken a hold and become one of the largest categories for its business. And it's now consisting of a greater and greater percentage of its business. And it's a category that's growing very quickly and should continue to fuel revenue, profit, and cash flow growth for TSM going forward. So at a forward price to earnings of 25, I still think the stock is a buy. Of course, I'm less enthusiastic about the stock at a forward PE of 25 than I was to start the year at a forward PE of 15. So the valuation has almost doubled from the start of the year, but the company's performance has also improved. So I still like the stock. I still think Taiwan Semi is a buy, and I'll update that recommendation today, October 17th. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.